Hi, this is Dave Myers with Paper Trail Financial with screencast number 2 regarding break-even analysis of your overall business operations. Here, I'll show you how to create a break-even table and chart where you can input the income and expenses to calculate possible future break-even points. I'll also go over how to tie your inputs to your previous year results from QuickBooks. Okay, I'm going to start with a blank Excel workbook. I need 8 columns here. So I'm going to highlight 8 columns and resize them a little bit and put in my column headers. I'll put in months, sales, total sales, cost of goods sold, total cost of goods sold, operating expenses, total operating expenses, and gross profit. And I'll make these bold and center them. I also want to put in my months. So I can go right here and put in January, and then we can autofill down through to December. Now I'll create the input sales. We want monthly sales, COGS, and operating expenses. And I'll make these bold and center them as well. And I want to use cell styles for the input cells, so I can go to cell styles and choose input. And I'm going to put some numbers in here so we can check the formulas as we create them. We'll put in 10,000, 4,000, and another 4,000. And I'll put in some number format as well. Now we want to make our sales monthly equal to our input cell. So we'll click on the input cell and hit F4 once so it's an absolute reference to that cell. And I can autofill down, and it looks like I have the wrong amount in there, so I'll fix that. Now I want to make total sales the running total for the year of sales. So I'm going to make January equal to January, and then February will be equal to January plus February. And then I can autofill down, and I'll fix the column width. Cost of goods sold is done the same way. We're going to make it equal to our input cell, hit F4 once to make it an absolute reference, and then when we enter it we can autofill it all the way down. And total COGS also the same. January is equal to January, February is equal to January plus February, and then we can autofill down. We're also going to tie operating expenses to the input cell. So we say equal to the input cell, F4 once, and then we can let Excel fill in the rest. Total operating expenses are a little bit different. For this example, we're assuming they're fixed, so we're going to use the annualized amount in all months. So I'll insert sum, I'll highlight the entire operating expense monthly column, and then enter. And in February we'll just make it equal to January, and then we get to fill the rest in. Gross profit is going to be equal to total sales minus total cost of goods sold. And we can fill this in, and I'm going to highlight the total rows and put some cell styles in to make them stand out. We're going to use them for our chart. Our break-even point is going to be when our fixed expenses, in this case operating expenses, equal our gross profit, which in this example would be the end of August. Now because we tied the table to our input cells, we can make some changes and see what happens. I'll put in 12,000 for sales, 6,000 for COGS, and I'll change operating expenses to 5,000. And here we can see our break-even point was moved back 2 months to the end of October. Now I also want to create a chart that's interactive and tied to this data. So I'm going to highlight our months and all of our total columns here. And I'm going to go to Insert on the tab, Area Chart, and the Stacked Area Chart type. Let me move it over here to the right. Now the data sets are in the wrong order, so I can right click in the chart and do Select Data. And I want to move operating expenses up a couple of spaces and cost of goods sold up 1 space. Also, I want the sales data to intersect the expense data. So if I click on the sales data and change the chart type, I'll choose line, and we can highlight the line here, control 1, and we can change the thickness of the line. And I'll also give the chart a background. Now, because the chart is tied to the table and the table is tied to the input cells, we can update the input cells and make changes to the chart. I'll put in 15,000. I'll increase COGS to 8,500, and let's just drop operating expenses 3,500. And you can see on the right our chart has changed to reflect the break-even point moving back a month. Now, in order to make this spreadsheet more useful, I'm going to tie it to actual results. So I'm going back to QuickBooks, and I'm going to generate the profit and loss standard report. And I'm going to modify it and change it to 1 full year of results, because this sample file has only 50 weeks instead of 52. I also want to add in the percent of income column, and I'm going to export this to Excel. Now, this is going to be open in a new Excel workbook. I'm going to clean up the columns a little bit and name the sheet, and I'll show you a trick for quickly copying between two open workbooks. We can go up to the View tab, and we're going to select Arrange All, and I'll do horizontal, and it'll open both workbooks in the same window. And all we have to do to copy one worksheet is hold down Control and drag it down to the first workbook. Now we can close out the new one that QuickBooks just created and maximize the one we were already working in. Now I'm going to tie our input cells to prior year results. So for sales, let's assume a 5% increase in revenues. So I can say equals, open parentheses 1.05, times, and we'll switch over to the profit and loss, total income from the last 12 months, close parentheses, divided by 12. So we've increased last year's sales by 5% and then averaged it by month. For cost of goods sold, I'm going to keep it the same proportion as last year. So I'm going to keep it equal to multiplied by our new monthly sales figure, and I'm going to go back to the profit and loss, and I'm going to use the 33.43% of income from last year, and then enter. I'm going to increase operating expenses a little bit also. Let's say 2%. So we can type equals, open parentheses, 1.02 times, and I'll switch back over to the profit and loss report, and we'll just click on total expenses, close parentheses, divided by 12 to get the monthly average. I need to adjust this column. We can tell by looking at both the table and the chart that our break-even point is somewhere just after the end of June. It's easy to make changes to these scenarios. If we go up to the formula bar, instead of 5% increase, we can do multiplied by 0.97 for a 3% decrease. Operating expenses, let's say we just keep it at 1.0 so it doesn't change. Our break-even point remains in July but later in the month. So you can do multiple scenarios, or even alter the assumptions and keep record of all of them if you wanted to copy each sheet every time you made a change into a new blank workbook using the method I showed earlier.